Welcome back to another episode of Fintech Rewired. Today on the show we have Bradley Laws, Head of Investor Relations and Ventures at crypto company Zilliqa. Brad, welcome to the show.
Thanks, Richard. Great to be here.
So look, let's dive right in. Zilliqa, can you give us, I suppose, let's say you're around the Christmas dinner table and one of your family members turns to you and said, Brad, what do you do? Can you give us that short, sharp, anyone watching this today can understand it?
Yeah, Zilliqa is a layer one public blockchain. And so what that means is the layer one part essentially is that we're building the base level infrastructure for blockchain developers to build their projects on top of. The public part means that it's open source, anyone can get involved and anyone can participate versus a private blockchain where it's closed, it's captive, certain participants. How I tend to try and distill it is really that if you're looking for an email provider or if you're a small business owner looking for a data storage or cloud services provider, what are you looking for really? Secure networks, reputable use cases, well-priced, just a good, trustworthy infrastructure. And that's essentially what we're trying to do in the blockchain industry.
I know from personal experience, I've seen a lot of other companies working in a similar position. They're trying to build this layer one infrastructure for other developers to build apps on top of. In Zilliqa's case, what is it that makes what you're doing different to some of the other blockchain projects and companies that are out there?
So we were the first public chain to bring Shard into market to really address that scalability point. The way that our tech is designed, meant to be super secure. We're very decentralized. We look at that in terms of who holds our native token Zil. We can also mine Zil, so the miners are pretty distributed, also node operators. I'd say that's on the first part, that's the technical side of things. How we also need to compete is on the commercial side. And so a lot of the time, when it's maybe an us versus other L1s conversation, a lot of it comes down to who's the right commercial partner, where's the domain expertise, who can offer good funding, who can offer dev support. In verticals like gaming, the metaverse, NFTs, DeFi, we're pretty strong, as well as having a great tech stack. And so a combination of those two things makes us pretty competitive, and it's why we've been around for 5 years.
It's interesting that you say that there's that balance between the technology itself, the blockchain and how that works, and then also, I suppose, the company and who you are and the people, like say, and the dev support that you have. It's interesting, I suppose I wouldn't have kind of assumed that other side would be something that people would put a lot of value on in the blockchain space, but clearly they do.
I'd say so, and probably actually even more so commercial than tech at times. I think a lot of the time, particularly in this space, devs are looking for liquidity most of the time. So where's the biggest funding check? Where can I get bigger grants? Where can I get bigger equity or token investments?
Yeah.
And then almost of secondary importance, they'll work through the tech stack and then later on maybe realize that wasn't quite the right partner, it was the right partner, but also happened to be the one maybe investing the most. So I definitely would suggest that devs and sort of project owners and founders really need to be quite thoughtful about who they're partnering with, because it takes a long time to deploy in the blockchain space. To have the right partner on the commercial side and on the tech side is really important. And it's one of those relationships that you can reverse out, you can go multi-chain or move chain. It's just quite difficult, so it does take a lot of consideration.
All right, Brad, so we know you're good at crypto, but what do you like at bowling? Shall we see?
Let's find out. Practice better, more practice.
I'll go for the orange one. That feels like the speedy choice.
Lefty.
Oh. Ooh, that's not a good start, all right.
Wow. Solid single.
As long as I hit something over this time, I'll be happy with that.
Better.
It's good. It's straight at least. I mean,
hustling already. Looks good.
Close.
That is unlucky. That is very unlucky.
I tell you what, this moose head is in a really annoying position.
Full market.
have time to save this game.
Good Halloween.
There's not a lot of time. Hey! Now I just need 2 more games like that. I've seen the word sharding thrown around a lot. You mentioned it a bit earlier, so let's circle back to that. For our viewers at home, can you give them just the simplest possible example or explanation of what sharding is and what you're doing with it at Zilliqa?
Sure. So essentially, the blockchain's looking at executing a number of transactions, and most of the time, historically, that was done one by one in order. Shards allow you to break up the transactions. It alleviates congestion from the blockchain, allows them to be executed, and then the transactions to be put back on chain, and then you can push on. So essentially just breaking it up into smaller segments makes it much more manageable, more controllable, and then you can push on.
Sure, okay, so it's solving a lot of those problems around scalability.
Absolutely.
I imagine that have traditionally held back a lot of blockchain projects.
It has, yes, and that's at the L1 level, and like you're right that the merge, Ethereum 2.0 has introduced sharding. Also, what we're seeing a lot of is L2 scaling solutions, so layer 2, where a lot of the work is taken off the L1. You can do it on an L2 level. We have roll-ups. Again, trying to get rid of the congestion on the main blockchain, and then that allows much more scalable processes,
Yeah,
and
sure.
It just makes life a lot easier for everyone.
Yeah, okay, so I suppose the takeaway is it's pulling off the handbrake that's holding back some of these blockchain projects,
Absolutely.
right? And I wanted to talk a bit about your experience as well, not just about what you're working on at Zilliqa. So, Head of Investor Relations and Ventures, that's a mouthful, but I imagine an incredibly unique and varied job. Can you just tell us, I suppose, what your day-to-day involves, and then also how you got into this space in the first place?
My background was more in institutional asset management, business development, investor relations, and then past few years I've been involved more in the early stage startup world, early stage investing, raising capital for startup businesses. Part of that was touching on crypto and blockchain startups as well, or fintech in its most broadest sense, and then to a lesser extent deep tech. I was put in touch with Zilliqa around joining them as head of investor relations. And investor relations, certainly at Zilliqa at least, there's different elements to it. So you've got Zilliqa Research, which is the L1, the parent company. We're headquartered in Singapore. We're a core tech infrastructure provider, so we can raise money at that level. We've got a whole ecosystem whereby we're trying to attract interesting devs and projects to build on our chain. So we raise money, we invest capital, and so we can raise money for an ecosystem type level. So how that lends itself is there's a lot of investor relations conversations, and then also I can sometimes help our portfolio of companies when they're raising and looking to push on as well.
There must be quite a balancing act between, I suppose, functionality of projects that you're building entirely internally, those projects that you're just trying to nurture, and I imagine being fairly hands-on with, but they're ultimately being run by someone else. And then also having your platform that is available to any other outside developers who have their own projects that they want to build on, and they're not having to come to you for permission to start building on that blockchain.
Correct. There's different priorities there that you just need to manage, really. I think past three and a half years, we're trying to build out a quite sector-agnostic, global, diverse portfolio. So we manage that under our ventures team. The incubation idea has only really been executed on in the past 9 to 12 months.
Sure.
And so that's quite a new dynamic, quite again, specific to Zilliqa. But definitely, I think most of the companies are looking for good tech support, good dev support, cash ultimately, and then guidance and mentorship really to sort of push on and be successful in crypto.
And just to go back to your work then, what was it when you saw that job description land that made you say, yes, this is a bit of me, this is my next career move?
So I'd been interested in the space for several years, hadn't quite worked out how I could maybe use my skills to enter a position in the industry. A lot of it was either quite ops heavy or very tech heavy.
Sure.
And so Zilliqa's got this interesting sweet spot now where we're building out a commercial and business team. So we didn't really have roles like marketing, community, sales and biz dev, investor relations. So it seemed to be a case of it's a role that I could potentially do based on my background in a new industry. There's some familiarity for what I could be doing, and just like tremendously exciting when I went through the interview process and started talking to management and the board about where they were trying to take the business. We'd essentially spent 4 years building really good tech, and that was about, we call it Zilliqa 2.0 internally, about that commercialization of getting that to market, getting users, getting projects on board, and growing the network effect.
And one thing I have to ask you as well, I remember a couple of years ago there was a huge kind of boom and bust of ICOs, initial coin offerings. And it feels like there's huge appetite within the crypto community to be using blockchain-based solutions as fundraising tools and as a means to attract investors. How do you see that playing out at the moment? How do you see it evolving? Because I imagine you must have a really, I suppose, unique perspective on how the industry is raising money.
So it's quite unique, this whole idea of ICOs and token launches in our industry. When I first joined in March this year, there were a lot of decks coming through and they were looking to raise money via a token sale.
Sure.
I would say we've seen valuations drop off and maybe some of the projects that weren't particularly high quality falling away. So what you'll see a lot in the token price at the minute is people can liquidate those positions quite quickly. And so the problem with tokens, what you're seeing often is it's considered to be a reflection on that project at any given time. Whereas obviously the macro environment's been really difficult, and people holding tokens, that's one of the first things that you can liquidate, because you can go into a central exchange 24/7 and you can come out of the position. So I would say at the minute, projects definitely want to raise money via tokens. However, there's not a lot of appetite in the market. Certainly that more speculative retail element of the investor pool has definitely gone away. We talk to a lot of investors and other L1s, and they've got a backlog of projects that are looking to do a token raise, and will probably look to do that maybe early next year, mid 2023, when there's more appetite for tokens. Until then, really, then you're trying to work with the founders to work out what's your runway looking like, how can you get funding. You could do maybe something with the community around NFTs, you could do an equity raise just to maybe bridge you into the token round. There are other options available to founders. I don't think tokens are going to go away. It's definitely something that I don't think the market has quite got right yet. We know what bad tokenomics and bad token launches looks like.
Yeah,
we haven't quite got a set of best practices that we can roll out, and we're learning ourselves internally. I think most of the market is. You've got insiders, you've got teams, investors, service providers, you've got retail, public sale, so many different groups with different incentives to try and throw that all into one tokenomic structure. You're talking economics, maths, behavioural finance. It's really, really difficult. And so we often see really good projects struggling to try and get all of those bits right and launch successfully and do everything else, like build a team, build a product, get some paying users and so on.
Yeah.
The tokenomics part is almost like a blessing and a curse in our space in some ways. So you just got to ultimately try and work out which way to fund the business makes sense for you, and sometimes that's not going to be a token raise.
Yeah, I suppose it's interesting. Probably another sign that the ecosystem is maturing, that the answer to everything isn't let's issue tokens. It's a much more complex mix, especially like you say, if you're issuing tokens that can be traded 24/7 on a platform, and your project may have, need a 5 or 10 year runway before it's actually profitable, that completely changes the mindset, I imagine, and the sort of appetite for risk that you need from an investor to back that project.
Absolutely, yeah, absolutely. So typically early stage investors or early stage companies, firstly, there is generally a route to profitability and an exit, and you're right, 7 to 10 years is generally a rule of thumb. So to take that dynamic in equity fundraising, almost flip it on its head and say that we've got a daily liquidity token is quite hard. And you can introduce vesting 2, 3, 4 years, whatever it might be, whatever structure makes sense, but it's very hard to force that tokenomic way of funding on an otherwise long-term patient capital type play, is what we're seeing. And then obviously with the macro environment, then it's generally pretty risk off at the minute. Crypto's not incubated from that. And so generally it's going to come down to appetite. And I think we're seeing a flight to quality, probably on the equity side, less early stage, more growth stage. On the token side, probably need some track record in the space, possibly a successful project before, or real focus on utility. It's not a case of now, here's the white paper, we're looking to raise 4 million and there's not a lot behind it. I think due diligence is coming into it a lot more than previously it did. And it comes back to that point on just the maturity or the industry maturing to some extent, which is only a good thing, I think, for investors and founders alike. Same side every time.
Hey, it's good, it's good. First game of each one.
Yeah.
Ooh, I mean,
You'll get a couple
I'll
there.
take that,
You'll get a
but-
couple.
Oh, nicely done. Okay.
Normally
Yes,
on the left, you're on the
exactly, I
right.
know.
Between us, there's a perfect bowling player in there.
Is that the takeaway from this game? Is that between us, we're almost decent?
That wasn't a dig. That was. That's good.
No, it's too wide. No,
I actually jinxed it there. You gone the other way.
that's okay.
No. Terrible.
It's good, it's good. No, twice. All right, so it comes down to the shot, game two. I mean, it doesn't, you've already won this game, but I can live in hope.
Better, let's see where to start. Okay.
Getting there, right, well, game 2
Game best of 3.
was definitely not a draw, but there's still time. I can claw this back with the third game. All right, Brad, so one thing I have to ask you, when you're looking at investor relations, what does the actual relations side of that look like? How are you building relationships with investors in the crypto space?
So I think what we're seeing is there are a lot of crypto savvy funds and they understand the opportunity and they've been in it for a while. They've seen the peaks and troughs of the market and they're probably a little bit more they don't get carried away by either a pessimistic or too optimistic a market. I think then you start looking at maybe some Web 2 funds coming into crypto, which is interesting to see. Again, they get under early stage investing, they're maybe just getting comfortable with what an equity investment versus a token investment might look like. You've then got the institutional side. Often people talk about this flood of institutional money coming to the space. Probably yet to see it. I think there is, the relations part is educating around the opportunity via digital assets and how that can help you diversify a portfolio. What sort of allocation makes sense? A lot of the time on the institutional side, you'll just see that they're not even mandated to hold alternatives, let alone digital assets. So we're miles off from those types of investors coming in. We are seeing maybe more banks, insurance companies, maybe more flexibly mandated investors looking at how to allocate. I think the way that the macro environment is at the minute and maybe uncertainty of where the regulatory environment's going to be going, then it's difficult for them to allocate in any size. So maybe they're dipping their toe in. And again, it'll be pretty mega cap stuff, maybe just Bitcoin, maybe sometimes Ethereum. So I think you'll just see different investors on different parts of the journey. It's such a nascent asset class that everyone's still learning to some degree. Institutions, I think right now, yeah, they need some regulatory transparency. They need a framework to work with. You know, NFTs property, are they treated as shares? Who's regulating them? Is it a commodity? Is it the equity regulator? In Europe, there's a whole host of different jurisdictions that have different views on crypto and licensing and passporting. I think MiCA in Europe's going to be great for that next couple of years that comes down. So Depends where the type of investor, depends where they're based, depends on the mandate. So, and it's all quite interesting because after a while you can see them come around to the idea that, okay, possibly there's something there and that, we could see ourselves doing something down the line.
One other thing we should circle back to that you mentioned earlier were some of the crypto projects that people are currently building with your layer 1 blockchain. Can you talk us through what those use cases are that you're seeing right now today? And also, what haven't we seen yet that we should expect in the next couple of years?
We're pretty sector agnostic in terms of the types of projects or founders that we work with. We particularly like a couple of different verticals. So for us, super bullish on GameFi, which I'll come back to in a second. We like enterprise use cases. They take longer to deploy, obviously a longer sales cycle, but I think the direction of travel suggests there's going to be a lot of good value there. DeFi, I think the wider market opportunity is once we get DeFi right, or to a level of consumer protection / investors having options that maybe they don't have in CeFi, then that's going to be really interesting. GameFi generally we like because we just look at different waves of adoption. So it could have been DeFi, NFTs have been pretty big. People are speculating about DAOs now. When you look at the gaming audience, they spend part of their time in virtual worlds. They are tech savvy. A lot of them do hold crypto. So when you look at maybe a leap of faith for them to get into Web3 gaming or gamification, or gaming within a metaverse, then it does make sense. So we're building our in-house games currently. We've got an SDK that gamers and developers can come on to Zilliqa and deploy pretty quickly. We've got some third-party partnerships. We're also pretty strong in esports. So we like that vertical. I think probably the wider opportunity is if the market gets DeFi right. It's been a tricky year, obviously, what was going on in the market with Terra and Voyager, Celsius. That April-May period was particularly volatile. I think a lot of people got burned. It was maybe DeFi 1.0, trying to work out what it all means, where can I put my money, what can I do with it, who can I trust? And I think the next thing is going to be things like really good market-making options, synthetics, derivatives, anything like that really sort of shores up what DeFi could be. I think it's going to be really, really exciting because essentially you're looking for utility for what they're holding, like how can they almost generate a better return from that. We're also seeing some really interesting things around decentralized social. Regenerative finance is a particular theme that we like. We're pretty big on the sustainability green theme. DeSci, which is decentralized science. So we've seen some really interesting DAOs buying pockets of IP before it goes to big pharma. And then they're using their background and knowledge to commercialize that, making sure that it stays in the public domain. So there are some really interesting trends coming through. And so we're pretty open-minded. We've got our key thesis of a couple of verticals. And then we have an almost other bucket, which could be anything. And we see some really interesting decks by some really inspirational founders and always looking to partner with those.
Yeah, it's interesting you say, that profile of who an early adopter is, and especially someone for a gaming project. It's somebody who already holds crypto, who knows about it, is tech savvy, is probably quite young. I suppose it'd be quite interesting to see how that profile evolves over time and more people become involved in the DeFi ecosystem or the decentralized apps in general and start to get more involved more than anything.
For sure. I think DeFi underpins almost everything that's going on, so you really need to get that right fundamentally. In terms of gaming, I think the gaming industry as a whole is relatively lukewarm to what maybe blockchain gaming could be, and mostly that's because early projects in the space have been too crypto heavy, and they just haven't been fun to play. So we've tried to flip it on its head. Our first game comes out beginning of next year called Web3 War. It's got an in-game token. We worked really hard on the tokenomics. You can have a battle pass, you can buy skins. It's free to play, mobile friendly, and we've got another 7 or 8 games over the next few years, as well as third parties coming on board. So I think it's a case of just trying to find, particularly in gaming, I mean, statistically, you need a big pool of users to be able to monetize just a few. And so to try and flip that on its head and say we're going to monetize everyone or a big portion, it's just not really going to work. And so we try to work our way around there. Just think about gaming should be fun. fun first, good games, high quality, skill to earn. We really like that narrative, and hopefully that's a better iteration on what's already been done in the space. Well, we've been warming up for this one anyway.
Exactly.
This is the main one.
This is the decider.
Pleasantries. We both win one of the first two. Bring it down to the third game.
Blistering shot. Very nice.
Come back round.
No. Okay.
There's one of three.
Yeah, that'll do.
That'll do. Looks better.
Too wide.
Difficult.
Yeah.
That is difficult. Okay, last roll.
Yeah.
Two.
Not bad at all.
Okay. Nice. A little bit there.
Okay. I mean, I don't think I'm winning on this shot, but at least
At
least save some dignity.
good.
No,
He's
too
done it
wide.
again. He's done it again. Okay.
Wow.
Well,
Brad,
Good.
incredible play. Thanks for coming on the show.
Thanks so much.
Very
Good to
nice
be here.
results.